Hello and welcome back to another episode of the Collective Clicks podcast. This is your host, Brandon Bateman, and today I have Daniel McLam on the podcast. Daniel and I talk all about how dispositions has been changing in real estate investing over the last several years. He noticed that in his business, solved that problem in his business, and built a product for other real estate investors to do the same based on being more targeted to finding just the right buyers for their wholesale deals. Daniel, how you doing today?
Good, brother. Thanks for having me.
Yeah, excited to have you on the podcast here. For people who don't know you and what you do, what's your story?
Yeah. Before we do that, Brandon, you know I have two older brothers that are both redheads, right? Do you know that?
I did not know that.
Redhead power, man. I did a public speaking speech in college on the uniqueness of gingers. You actually have some superpowers that you might not know about.
I don't know if I should believe you that that's true or not.
I'll send you the PowerPoint after this.
Okay. Maybe we'll do episode number 2 to dive deeper in.
I had to throw that out there. I couldn't help myself.
Fair enough.
Yeah, my name is, for those of you who don't know me, Daniel McClam. I'm the owner of InvestorBase, which is a disposition software that we launched in April 2024. So we are the newer kids on the block, but we have built a software that a lot of people are enjoying and growing today. So appreciate you having me on to share the story and what I've been seeing out there.
Sure. Yeah, I'm excited to dig into it. And really, I always love talking to people who have products for a different part of the business because you typically understand a lot about what's happening in that part of the business for a lot of investors. You know, what's more valuable than like one person's data point of what's happening in their dispositions would be talking to you about what's happening with everybody's dispositions that you're finding out. But before we get into that, let's talk about, like, I'm sure your professional life didn't start the moment that you launched your software company in April of 2024. Like why did you do this? What was your story before this? Were you like a real estate investor? Like it seems 95% of software vendors were before they started their software company.
Yeah, well, been in real estate for quite a while. I majored in commercial real estate finance, and then I was a commercial broker for 3 years. Did a lot of deals with a great team. It was awesome. Jumped into wholesaling in 2021. We were a lot different than most other wholesale businesses. I'm mindful of the fact that a lot of people were selling to institutional buyers, but we jumped into wholesaling with the sole intent to sell to institutional buyers. So the way we built our whole business, our marketing, our everything was around selling to people who were paying 100, 110, 120% of ARV minus repairs. Man, I wish those days were still going, but we launched in 2021, that wholesale business, and did about 150 deals in 18 months. So we scaled very quickly, and we were doing 10+ deals a month. We were in a bunch of different markets virtually. It was all virtual. And the way we essentially chose a market was based on who was paying the most. That was our methodology for Dispo, was we'd go find who was paying the absolute most nationwide. We form a relationship with them. And that's how we chose what marketing that we would even push. We'd pull a list. We had about 20 cold callers at one point and a third party, 4 acquisition agents in-house. We were rolling, man. And in 2022, I think everybody remembers when rates went up and a lot of those institutional guys just went away. We were extremely leveraged into that, and we got hit like a freaking bus, man. I remember October 2022, I had like 2 phone calls that I got from, the hedge funds acquisition managers. And it was like, hey man, like we can't do any of these deals. And we had 30 deals under contract at that point in time. And I think half of them were terminated, which was, $150,000 to $200,000 in assignment fees gone like that. So long story short, man, we had to obviously pivot, and we still had leads coming in. We had acquisition agents that needed to eat. We had to move these deals too, and we looked out there, and there wasn't really a great option that we could immediately, spin up, find buyers to do our own deals. So we were forced to JV, and we did that for a little while, but it was just unsustainable. Giving up 30, 40, 50% of your deal. It's like my 4 acquisition guys are working just as hard, but now they're making half as much. And they're looking at me as the owner like, well, hey, Daniel, you got to figure this out, right? So we figured it out, and we took a manual process that we were doing of identifying flippers and landlords that had recently done a deal, and we automated it into at that point in time, we called it Buyer Beacon. So that was in 2023. We started using it in our own business. It worked great. And that was the initial MVP. And we modified it, evolved, rebranded to Investor Base, and went full-time into it in January 2024, and then launched it to the public in April. So it's been an interesting journey to date, but it did come out of really a time of need, man. I mean, it was a pretty tough time there for a little while. So yeah, just trying to solve our own needs, really.
Sure. Yeah, you're not alone in that. I think a lot of people were a little bit thrown off by that, but you're right that most people weren't all in on institutional buyers. They're just, partially in there. And I understand why you did that with when you launched your business. I think a lot of people, had the business before then when that wasn't as much the exit strategy. So from your perspective with dispositions today, because that was, we're talking 2021, 2, 3, 4, like a lot of stuff has changed. What's been changing from what you've seen working with the clients that you've been working with over the past year in dispositions?
Yeah, good question. We've had the opportunity to onboard almost 1,000 wholesale companies into the software in the past 8 months. So that's, we hop on a one-on-one Zoom. We find out their processes. We find out what's working, what's not working, what they need help with. And a common theme is pretty simple, man. Like dispose getting a little bit harder seems to be a common response. And I think, what we found throughout 2024 is a lot of people are still doing the same thing they were doing like in 2022, 2023, which, as at that point in time, you could probably close your eyes and, throw something up on a dartboard and it would likely stick and you'd have inbound offers coming in. But I'm starting to hear and see there's so much noise out there between, emails coming in people's inboxes, right, from everywhere, right? And text, right? There's just a lot of clutter out there. And it's making buyers grow a little bit numb to, let's say, wholesalers' email blast or text blast, just due to those communications and the industry as a whole. So I think that's coupled with a few other things, just with where the markets are, with where the market is. Yeah, I did a speech on this yesterday to a group of investors. Is, the market is still in a bit of a, we're at a very low affordability point, right? I know people know that, but we've had 14 consecutive months. Well, I guess let me backstep. If we just look at the end of the chain, right? So we have seller on the front, we have wholesaler, we have flippers, we have end buyers, right? So all of these deals are moving down the chain to the end buyer, right? On retail, more or less, unless you're holding it, right? But let's talk about flips, right? At that chain, the end of the chain, we need to look at that because affordability is at an all-time low in the last 4 years, right? We have 14 consecutive months of increased inventory. Buyers, I found this stat the other day, buyers had 30% more listings to choose from than in 2023. So there was 30% more inventory when, say, you, Brandon, you go to look for a house to buy, you have 30% more inventory. And what's that done is, we've went from 23 days on market in 2022 to 50 days on market in 2023. Now we're at 62 days on market for these flippers. So I say all this because trying to explain why dispo might be getting a little bit more difficult is there's a little bit of a squeeze effect happening, right? And when that happens, like flippers have more holding costs, right? They might not be able to deploy as much capital, right? So they're maybe buying less, right? They're feeling, an extra 2% in price reductions from 2023 to 2024. That's a significant amount. That's like 50% more price reductions than the previous year. But nobody really notices that because those small incremental margins are being squeezed out of the flipper's profit margin, right? Seller concessions are still really high. They're at like 40% year over year. So like you're already going to get tagged with 5, 10, 15K in closing costs right off the bat when a retail buyer makes an offer on your deal. So what happens when the flipper gets squeezed is the wholesaler gets squeezed a little bit, right? Flippers start to buy a little bit deeper. They start to be more mindful. They start to be more picky. All this is kind of tough to notice because I don't think it's truly really hit yet, but it's just like kind of small, subtle, but present things there with the market. And I would maybe expect to see a little bit more of the same in 2025, but the sellers haven't come around to really realize any of this because the average sale price is still the same between 2023 and 2024. It's actually went up a little bit by like 4%, from 420 nationwide to 429. So, the end buyers, even the flippers might not realize it because they're still running the same ARV, but they're going to realize that they're getting a little bit squeezed on all the in-between soft costs. But the seller still thinks, oh, I can sell my house for whatever I want. So there's the people who get affected are us, right? Flippers, the investors on the middle of those two chains of events. So it has created a little bit of an environment where I guess buyers are engaging less, I would say, right? So like getting a buyer to really look at your deal is getting harder, I'd say. Really long-winded answer. And I just gave a speech on that yesterday, which is why I had all those stats. But I figured it'd be applicable to share because it really was enlightening to me as to the why I'm hearing a common trend amongst 1,000 wholesale companies pretty much.
Yeah, no, that makes a ton of sense. So that said, if it is true that the flippers are getting a little bit squeezed, and it means you mentioned a few things. You mentioned maybe they're just not offering quite as much. Maybe they're being a little bit more picky about what kind of deals they're offering on, which we know is a polar opposite market compared to the COVID market, where it felt like you could like write down like wholesale deal on a slip of paper and throw it into the wind, and then you'd have like 110% of ARV offer on your desk the next day, right? Like marketing was a little bit different then. So what's your advice to the average investor that is dealing with that little bit of squeeze going into 2025 now?
Yeah, I won't speak to the flipper as much as the wholesaler, just because that's where, my main expertise is. I will just say for the flipper, price competitively, we see anything that's overpriced is going to sit on the market 40% longer than anything else. So maybe that's a tidbit for the flipper, but for the wholesaler, I really think for 2025, it's probably about really diving headfirst into engagement with buyers, driving up engagement, right? Response rate, right? So, let's say you have a deal under contract. On the dispo front, you're fairly limited to what marketing channels that you can utilize because there's a timeline, right? You have a contract, say you have a DD period, or you have a closing date. That's in 30 days, 60 days, whatever it is. That's a constraint on timeline. So you don't have all the other marketing channels to choose from like you do with marketing to a seller. So my advice would probably be to maximize the three main channels that I believe we do have, which is not revolutionary, but it's going to be email, text, and cold call. You mentioned like different market, right? You can't just close your eyes and the deal is going to sell anymore, and that's what a lot of people, they just email their entire buyers list. They text their entire buyers list and wait for somebody to raise their hand or wait for somebody to click on it. But a lot of people might not be clicking on every one of those because they have so much clutter. There's a lot of noise out there. So I think leaning into a more robust cold call channel, whether it's with a VA or whether it's with an additional VA, or whether it's more SOPs and call cadences for your dispo manager to hit either cold traffic or specialized traffic within your buyers list, is going to drive that engagement up for your deals, which I think is going to be really important for 2025.
Yeah, that's fantastic. And not to mention, like, I get a hunch from talking to some clients. I'm curious what if you think this is a thing or you think I'm off base. I've definitely worked with some clients that we've had in the past where it feels like the goal of dispositions is to sell the property. But when you look at it, we have other clients, and I know this is based on having like similar clients in the same markets and things like that, and seeing the vast difference in their assignment fees, that focus on dispo, like selling it as high as they possibly can. It can get significantly more, right? But it's hard because there's a really easy metric in the business to say, like, did we sell the deal or did we not sell the deal? It's a hard metric to know how much did we sell the deal for compared to what we could have sold it for. because you don't know that you couldn't have called an extra 100 buyers and found somebody that was going to buy it for $10,000 more than the buyer that you actually ended up going with. Finding an extra $10,000 in that deal could be easier than finding a new deal where you can make $10,000, right? I think there theoretically could be so much more value in this. To what extent do you feel like, so I guess what I'm saying is I've worked with a couple companies where I felt like they were leaving money on the table there. Also, it's not really my place. It's not really what I do. Do you think that's a common thing? Do you think that's happening? And do you think this solves that?
Do I think investor base can help solve that?
Well, I wasn't even asking about investor base specifically as much as
Engagement.
Engagement. Yeah. More.
Yeah, okay. I mean, 100%, man. Like, you know, I would say if you're running your dispo where you have zero cold call built into that, right? You're leaving engagement on. There's a lot of slippage in engagement there, right? I mean, sales in general, you know as well as I do. If a seller raises their hand and says they're interested, you're not going to text that person. You're going to call that person because it is the highest likely conversion rate to close that deal, get that person in the door, get that person interested. Same goes for dispo, right? You need to make phone calls. If you're running it to where you're making a handful of buyers or handful of phone calls to your VIP buyers that you call every time, I can assure you you're leaving money on the table. No doubt. And what we've found through investor base is we really lean into the price that buyers paid for a similar deal around you, right? So it doesn't take a whole lot of effort for you to run that address through our software and immediately identify if we're leaving money on the table or not, because you can basically see every single price that an investor paid for that deal right around the corner from you. So for instance, if you have it under contract at 100,000, you're thinking about marketing it at 130. Let's run that through investor base. And then you see that 4 flippers around the corner paid 150. I'm going to assume you're leaving money on the table there, right? And if you're not reaching out to everyone who's done a deal nearby recently, once again, you're likely leaving money on the table. I don't know how you fact check if you're leaving money on the table or not. I don't think it's entirely possible because what someone's willing to pay is totally subjective to their end goals, like that buyer's appetite for their return metrics, right? Or what they want to do with the property. So it is tough to say how much you're leaving on the table. That's why engagement is so important, because you want, you know, as much engagement and offers as possible, right?
Yeah, that makes sense. So let's talk about investor base. Your recommendation is you need more engagement with your buyers. How exactly does investor base get you there? From what you just said, like, I'm assuming there's some way to basically say, for this deal, let's find people who bought similar deals. You end up with that list, and then what? Are you texting through the platform, emailing through the platform? Do you just get that information so you can use it with whatever your own system is? Is that all that investor base does? Is there more to it? Like, there's so many questions. So,
yeah. So with investor base right now, you have to make calls on the software, right? We have an integrated text or email, essentially for a reason. You know, we are mindful of the end buyer's experience right now. Once again, I've heard from a million people that email and text is growing a little bit numb for buyers. I'm a firm believer that making calls is the highest form of engagement and conversion. But what we're doing to engagement, it's similar to, like, at investor base, it's a sniper approach. It's similar to the methodology of how we ran our wholesale business, which was, hey, let's identify who's paying the absolute most and let's prioritize engaging with those people, right? So I'll say this, like, more often than not, people have always just blasted their entire buyers list and they've went out, they've collected their buy box, right? But when's the last time someone actually utilized a buyer's buy box? What we're doing at investor base is you can basically curate your buyers list based on the deal you have. And this is something we just added the other day. This is called buyers list, right? So you can actually curate your buyers list to know who on your buyers list that deal actually works for based on their buy box, right? Which, what that means is you're prioritizing your marketing, right? You're prioritizing your calls to the people who are most likely to be interested, not just the mass blast approach. So while I'm saying, hey, let's drive engagement to as many people as possible, at Investor Base, we're helping you drive engagement to the right people. Okay. We're helping you prioritize your marketing and your time towards the people who, one, when you run a new search, we're filtering the people who are most likely to pay the most towards the top. Prioritize calling those people. Also, with your buyers list, prioritize calling the people who actually have the buy box for that deal.
That makes sense. Well, it makes what you're talking about possible. Because if I have a buyer's list of 10,000 people, every single deal we have, I'm going to call all 10,000 of them. Like that's a workload, right? It's
that and you probably don't have a way to filter like you can with us, right? It's I haven't seen really anything out there to curate your buyer's list and then have that VA, hey, go filter by their deal. Let's see who the 100 people are, 20 people are on our buyer's list. That will actually be a fit. Say it's on septic and well. That's going to cut out like 50% of your buyer's list. You don't need to send it to them. Now they're growing numb to your other marketing, right? Like, why collect someone's buy box in the first place if you're going to send them everything? I'm sure you've flipped houses, Brandon. Like,
I haven't.
Whole night. You never flipped a house?
I never flipped a house.
Okay. Well, it's all good, dude. Well, speaking from experience, I guess, we flipped probably 15, 20 houses in the last 12 months. And I'd say, like, whenever I get some on my buy box, right, they call me, hey, Daniel, saw you the deal over here. Are you interested in buying more? I give them my buy box for 5-10 minutes, and they send me deals that are obviously not in the area I want to buy, et cetera, et cetera. I'm like, what the hell, man? And then I grow numb to it, but if he were to send me the exact deal that I want, probably going to offer on it. So there is another thing out there of buyer list attrition where people are growing numb to campaigns, right? So like prioritize the people who that deal actually works for is what we really hope you do.
Yeah, I love it. The other thing I like about a software like Investor Base for digital marketing specifically is that when it comes to online marketing, you can only control to some extent the locations of the leads that you're generating. And for the most part, your leads should be in the areas that you're interested in operating in as a business. But you'll also get stray leads outside of that. The very best PPC managers will still get a significant number of out-of-area leads. And our clients have different ways of dealing with that. But the difficulty is the old way, where I build up like this big list of buyers through the Facebook groups that I'm in and through, networking locally and all that stuff. And I just eventually build up this big list of buyers and I email them. And I'm operating in, let's say, Alabama. And then I get this lead that comes in, and that lead is in Florida. I don't operate in Florida. There's not really much that I can do with that lead, right? But what's cool about your software, it actually gives a disproportionate advantage to somebody that's newer, whether newer to the business or just newer to a specific market or something like that. To where now I can say, well, these 10% of leads that I'm getting from my campaign that are in my core area, I can pursue those. And I'm not necessarily looking for those, but if I do get the lead, could I make money from it still? I absolutely could, because even though I haven't operated in Florida, I can use this software. I can get a list of all the key buyers for that deal. And I can add this thing to my business without it costing me a massive amount of money. Because Investor Base is, how much do you guys charge these days?
It's $200 a month if you do annual. That includes the skip tracing for all the buyers.
Oh, it includes skip tracing.
Mm-hmm. Yeah. So 10 million investors nationwide, estimated nationwide coverage, so no geographical limitations, to your point, 200 months. It's a one-step process, right?
So I honestly see that as a solution for a lot of our clients that are dealing with those out-of-area leads. Because you could just say, like, I've had clients before where they make 6 figures on a lead that came in that was outside of their market. Yeah. They found in a disposition in another market. Like, do we not want those leads? Yeah, we don't want those leads. But if we already paid for them and we can only mitigate that to some extent, and you can spend $200 a month on something that allows you to disposition those outside of your market when they come across.
Yeah. I mean, those leads are inevitable, right? Even if you're pulling a list and doing cold call or text marketing to sellers, like with Hawks Real Estate, I mean, we would always get leads outside of the market that we wanted to get leads in with a list that we pulled, like because they have another property that's in their portfolio that's elsewhere, or the skip trace number was wrong. We happen to call a homeowner that like lives in another market that has houses. And that was probably, 10, 15% of our leads were like in rural areas. And, towards the end of it, I was just kind of told my acquisition agent, was like, hey guys, just don't work this, right? Even if it looked like a deal, I would just tell them not to work them, because I knew the uphill battle that it would be on the dispo side for us. So with investor base now, I mean, to your point, yeah, it's great for monetizing some of those rural deals that you might see at first as an uphill dispo battle, and then you run it through investor base and you realize, oh, there's 50 buyers here. There's a mom and pop landlord right around the corner. There's you guys who have flipped houses. You instantly have buyers for any deal across the entire country. So for PPC and the SEO type people who are trying to like geofence, geotarget, I don't know, whatever y'all call it, like it's tough to do, and there's a lot of leads out there that you get that you need help moving.
Sure. Yeah, it's typical if someone lives in a market, but they are searching about their house in a different market, or all kinds of weird stuff happens. So anyways, thank you for sharing a little bit about what you see going on in the industry and about your company and everything, Daniel. If anybody listened to this and wants to get a hold of you or is interested in working with Investor Base, where do they go?
Yeah, I'd recommend booking a one-on-one demo with our account executives. These guys are investor-based pros. They were also ex-wholesalers, so they understand the biz. They understand PPC. So we basically have a one-on-one call on Zoom. We show you the product. We run some live searches, audit the data, and then ultimately we have a 14-day free trial. So a free onboarding session, a free trial, and then it's, the $200 to $250 a month, depending on what plan you go. So we don't give you a whole lot of reasons to not give it a shot, right?
Yeah, free trial is pretty significant, because if you have a deal you want to move, I'm assuming with the free trial, can you use every capability? Like I can do everything I want to try to sell a deal there?
Yeah, we have people move deals during the trial all the time. It's actually pretty funny. But you just be mindful. You have 8 searches during the trial, and then you have a little bit of limited results, and then you can't export that list, which is another point as far as engagement. Obviously, like you can export the list to CSV and pop it into an email or SMS dialer, or if you have a CRM that does that for you, you can just populate that in there. So that's the easiest way on that.
Cool. All right. Thank you, Daniel. Appreciate your time. And for everybody else listening, I'll see you next week.